Welcome to another S&P 500 analysis. Last week, the S&P 500 continued with its record-breaking streak. It closed at a record high every day last week. So is the correction off the table for now? In this video, we're going to look at the internals and see if they are telling us the correction is off the table, and also look at the sentiment to see what is the current bias of the market participant. This week, there was also a major development for the Dow Jones Transportation. We will discuss that along with analyzing the price action of the S&P 500 to determine what are the most probable upside and downside scenario for the upcoming week. And we will also look at the other major market indexes and see what they are telling us about the big picture. Looking at this long-term monthly chart for the S&P 500, the S&P 500 has been up for 5 consecutive months. It put in a new record high that is above the long-term megaphone channel that was started from the bottom of the financial crisis in March of 2019. Zooming in on the weekly chart, the S&P 500 had a range of 96 points. It gained almost 110 points or 3.25% for the week. It closed 114 points higher than the February all-time high, or 3.37% above that high. So not only did the S&P 500 recoup all the losses from the sell-off, it also gained an additional 114 points. The 10-week moving average and the 40-week moving average are still up, and the price is still above these two moving averages. And it's been one time framing up for the last 8 weeks, meaning it's been making higher low for the last 8 weeks. On a weekly basis, the trend is still up. Before we analyze the S&P 500 price action and the major development of the Dow Jones Transportation, let's take a look at the sentiments and the internals and see are they still saying a correction is imminent. Once again, nothing is new here. The VIX is still hovering between the 20 and 30 level. It did spike up above 24 briefly, but did not continue to move up. The put-call ratio is getting a bit too bullish. It did dip below 0.45 briefly, and it closed at 0.51 on Friday. Market participants are getting a little too bullish, and the sentiment are telling us to be cautious. The New York Stock Exchange up-down volume ratio was positive every day last week, except on Wednesday. It was negative as the S&P 500 was making another new high, resulting with a negative divergence. The New York Stock Exchange daily advanced decline was showing negative divergence on Tuesday and Wednesday as well. The New York Stock Exchange up-down volume ratio and the daily advanced decline are flashing cautionary signal. The New York Stock Exchange new high, new low is still running below 100 as the S&P 500 is making record high. This lack of expansion on the new high, new low to the upside as the index is making new high is also flashing cautionary signal. The New York Stock Exchange AD line and the S&P 500 continue to show negative divergence. Until the AD line move above the August 12 pivot high, we need to remain cautious. Now let's look at the NASDAQ market. The NASDAQ 100 had 2 down days last week, Monday and Thursday. And strangely enough, there was a positive up-down volume ratio on Monday while the index closed down, a positive divergence. And looking at the daily advanced decline, we see also there were more advancing issues than declining issue on Monday. But on Wednesday, the NASDAQ closed up and there were more declining issues than advancing issue, a negative divergence. The occurrence of a positive and negative divergence in between such a short period of time is telling us the NASDAQ is on edge and we need to be cautious. The NASDAQ new high, new low did improve a little. It had a new high over new low by more than 100 for every day except Tuesday. On Tuesday, it had 98 more new highs than new low. This is still not something to write home about. We will remain cautious. The NASDAQ AD line continued to show negative divergence. This has been a concern and it remains to be a concern, another cautionary sign. Overall, the put-call ratio is saying market participants are getting a bit overly bullish, and the VIX is showing some sign of fear could be starting to creep back in as the S&P 500 continue to move higher. The new high, new low are not expanding, and the negative divergence between the cumulative AD line and the S&P 500 continues to persist, These signs of lack of strength in the market are telling us to continue to be ready for a near-term correction, and the higher the S&P goes before a correction, more volatile the correction will be. Now let's take a look at the price action. Again, the same index made new high last week, just like the previous week. The S&P 500, the Nasdaq 100, and the Nasdaq Composite closed at a new all-time closing high. The New York Stock Exchange Composite is still more than 1,100 points away from its all-time high. The Dow Jones Transportation closed at a new 52-week high. This is very significant development for the Dow Jones Industrial. The Dow Jones Industrial is still approximately 900 points from its all-time high, which is also the 52-week high. Here's the significance on the transportation closing at new 52-week high. Based on the Dow theory, this is a signal that the industrial will likely follow suit by making a new 52-week high. And the current 52-week high for the Dow Jones Industrial is the all-time high. So we will likely see the Dow Jones Industrial to make a new all-time high in the near future. We will look at some price level when we discuss the individual index later on. The Russell 2000 is still 160 points below its all-time high, but only about 120 points from its 52-week high. Let's analyze the S&P 500 price action and see what's going on. On Thursday, it crossed above the 3,500 mark for the first time. It went as high as 3,501.38. On Friday, the S&P 500 continued its climb and reached an intraday all-time high of 3,509.23 and closed the week at another record closing high of 3,508.01. Switching to the 60-minute chart, last week I have put up these Fibonacci retracement and extension to project a potential upside target. And there was this confluence price zone between this 141 and 127 extension. This price zone was in play on Monday and Tuesday. After it moved to this price zone, it climbed all the way up to the 200 extension and took out the psychological 3,500 level and closed above it. If we consider this as a flag, we could use the Fibonacci extension tool to do a major move projection, and we could see a potential 100% major move up near the 3552 and above the psychological 3600 level near the 127 extension. So these are some of the possible near-term upside target. Switching back to the daily chart, we see the S&P 500 continue to be one-time framing up and moving away from the lower boundary of this rising price channel. The longer-term resistance level using this Fibonacci retracement tool could be the 127 Fibonacci extension at 3720 and the upper trend line of this price channel. The near-term resistance could be at the psychological round number level of 3600 or 3700. Now for the potential support. The first level of support is the lower price channel trend line, then last week's gap near 3399.96, and then these gap near 3318.14 and 3284.53. And if the pullback continues, then we will likely see the 3200 as a potential support. For the longer term, using a Fibonacci retracement on this recovery swing, there is the 3000 level near the 618 retracement and near these pivot lows. This correction represents approximately a 14.5%, which is within a major correction range. Now let's take a look at the other market indexes. For the Nasdaq, last week we said the potential resistance is near 12,000, and it went to a high of 12,097.89. For the coming week, we continue to use the upper trend line of this rising channel as potential resistance. The first potential support is the gap near 11,721, then the lower trend line for the price channel near 11,400, and the pivot near 11,277. Let's take a look at the Dow Jones Transportation before we look at the Dow Jones Industrial. The Dow Jones Transportation closed with a new 52-week high, but it did not make a new 52-week intraday high at 11,359.50. Since the transportation closed at a new 52-week high, and based on the Dow theory, the Dow Jones Industrial will likely follow suit and make a new 52-week high. The nearest potential resistance for the transportation is the 52-week intraday high at 11,359.50, then the all-time high at 11,623.60. And the potential support is the gap fill at 10,960, then next potential support near the next gap fill and the trend line near 10,640.50. Looking at the Dow Jones Industrial, last week we said the potential resistance is near 28,402. It had exceeded that and now it appears to be headed to fill the gap. Therefore, the nearest resistance is 28,892.70, then the all-time high at 29,568.60. For potential support, the nearest one is the gap fill at 27,959.50. I'm going to remove this level here since it's no longer in play. Then the next potential support will be the gap fill near 27,433.50. The Russell 2000 continued to move higher with the supporting trend line. The Russell 2000 initial resistance is near 1,610.60, then the pivot high near 1,698.90. Potential support remains same as last week, 1,539.70 and 1,461.30. In summary, the S&P 500 and the Nasdaq continue to make new high with weak internals. These indexes are overextended, and it's just a matter of time a 5 to 10% correction could occur without any warnings other than what we have reviewed in this channel. Right now, all news are good news regardless they are good or bad, so I would exercise cautions and tighten the stop on all existing long position. So where is the correction, you might ask? Well, the fact is no one has a crystal ball to predict what the market will do. All we could do as a trader is to listen to what the market is telling us by looking at the internals, analyzing the price action so we can prepare for what the market is indicating what it is likely will do. And based on our analysis, the likely scenario remains to be a near-term correction in the range of 5%. In the longer term, we could see a major correction in the 14 to 15% down to near the 3,000 level. Don't forget to click the thumbs up to help me promote this video on YouTube. Thank you for watching and stay safe.